Welcome to The Explainer. Today, we are digging into something that's really making waves in the markets, this idea of a silver supernova. We're going to deconstruct 7 pretty wild predictions from this analysis, slide by slide, and really see what's going on here.
All right, let's just jump straight into it. The source here doesn't really beat around the bush. It kicks things off with this huge declaration. The silver squeeze, it's not something that might happen. They're saying it's here. It is happening right now.
So, to really get what they're talking about, we've got to look at the warning signs they're pointing to. And we're not talking about numbers on a chart here. This is all about what's happening in the physical metals market, with actual bars of silver.
Okay, so the whole argument really stands on a few key pillars. First, they're saying the COMEX vaults, a huge hub for this stuff, are just bleeding physical metal. Second, and this is a big one, the London market has apparently defaulted on delivering physical bars twice in just the last 6 weeks. That's a huge red flag. And on top of all that, they're seeing big money pulling out of things like crypto and moving into precious metals. All right, now let's get to the first really specific short-term prediction. The source is saying there's this pattern, one that's been super reliable in the past, and it's signaling that silver is about to make a huge, explosive move. And they mean soon.
And it's not just them saying it. This feeling of you better hurry up is being echoed by other big names in the market like you see here. The message is pretty clear. The train is leaving the station and it's not going to wait.
So they've identified this 3-step process that they say happens almost like clockwork. Step 1, the deliverable stockpiles of silver just collapse. Step 2, the exchange jacks up the margins, making it way more expensive to trade. And when those two things happen, boom. Step 3, the price just explodes higher. And the kicker is, they claim this is the exact same playbook we saw in 1980 and 2011. And guess what? They say it's happening all over again, right now.
And that pattern brings us to the very first concrete prediction, a hard number. Based on what we just saw, the source is calling for silver to close above $62 an ounce this week. And get this, they're saying that's a conservative number. That's just the floor for where they think it's going by Friday.
Okay, so if you thought that was interesting, this is where it really gets wild. The analysis points to 2 other things that are going to act like rocket fuel on this fire. We're talking about the gold to silver ratio breaking down and a potential, well, a halt in trading.
So first up is this huge technical event. You see, for like 14 years, the gold to silver ratio, which is just how many ounces of silver you need to buy 1 ounce of gold, it was super stable. It sat around 77 to 1. But according to the source, that long-standing support level has completely shattered. They're saying the ratio is now in total freefall, which, if you followed this stuff, is a massive deal.
So why should you care about this ratio? Well, historically, whenever it breaks down like this, silver doesn't just go up, it outperforms gold by a factor of 3 to 1. So you take that historical pattern, combine it with a forecast for gold to hit $4,500, and, well, you do the math. It points to a silver price of around $67, and that's where prediction number 2 comes from, silver hitting that $65 to $68 range before December 15th.
The source uses this really great analogy to help you visualize what's happening. Think about the price of silver like a beach ball being held underwater. All those paper contracts are pushing it down. But the hand holding it there, that's the physical supply. And that hand is starting to slip. You can just imagine the incredible upward pressure that's building up.
And that slipping hand, that beach ball about to rocket out of the water, that leads directly to prediction number 3. The idea is that the pressure will get so intense that at least one major exchange is going to be forced to halt all silver trading sometime this month. And just the announcement of that halt, they argue, would cause the price to immediately jump, something like 8 to 12%. Okay, so for a second, let's zoom out a bit. We need to talk about gold and the bigger macroeconomic picture, because according to this analysis, that's what's really driving this entire scenario.
So what's the backdrop here? Well, it's a global financial system that's seen as being leveraged to the absolute hilt. The source points to a few things. Japanese bond yields are at multi-decade highs. In the US, margin debt, that's money people borrow to gamble in the market, is at a crazy $1.2 trillion. And the national debt? It's closing in on $38 trillion. The argument is that gold is seeing all this risk and reacting. It's gapping higher every time there's a new sign of trouble.
So we've seen gold make a couple of these big jumps higher recently. The source says a third one is coming, and it's coming soon. This all builds up to prediction number 4, that gold will hit $4,500 an ounce, and the timing is specific, before January 20th, 2026. Why that date? It's Inauguration Day in the US, which is historically a time of, let's say, peak uncertainty.
Okay, let's bring it back to silver now.
The real fundamental driver here, the core of the argument, is a massive supply crunch. I mean, look at this. The world produces about 950 million ounces a year. But the amount that's actually registered and available for delivery, it's less than 160 million ounces. That's not even 17% of the annual supply. And this is the real breaking point. The whole system hinges on this 5% number. The claim is that we're unbelievably close to the moment where, if just 5% of the people holding paper silver contracts decide they want the actual physical metal, the vaults will be completely emptied. The system breaks. So you have this unstoppable force of soaring demand hitting the immovable object of vanishing physical supply. And that collision is what underpins prediction number 5, that the headline $100 silver won't just be something for niche blogs. It'll be on mainstream news and before February 1st, 2026.
All right, we're heading into the home stretch now with the final predictions. These are all about how silver is expected to perform against other assets and a forecast for some really, really extreme volatility.
The source holds up this chart as basically a snapshot of what they're calling the Great Rotation. It's pretty simple, right? Silver's value's up, Bitcoin's is down. For them, this is clear as day evidence that money is literally rotating out of assets like Bitcoin and flowing directly into precious metals.
And that observation gets formalized into prediction number 6. They're not just saying silver will do better than Bitcoin. They're predicting it will outperform it by at least 3-1 between now and March of 2026. And finally, let's talk about volatility, specifically weekend volatility. You know, the US markets might close on a Friday afternoon, but trading continues around the world. The source points out that we were already seeing weekend price gaps of $2 to $4 back in November. Well, as that physical inventory gets tighter and tighter, the prediction is these moves are going to get way more violent. They're forecasting at least one weekend where the price gap's $7 or more before New Year's Day. Okay, so let's put it all on the table. We've gone through a lot. Here's the explicit forecast from the analysis, all laid out, with the key targets and timelines we've just been talking about. When you boil it all down, the analysis really ends with 3 huge on-the-record predictions. Number 1, silver closes above $62 an ounce this week. Number 2, gold hits $4,500 by Inauguration Day 2026. And number 3, we see that milestone headline $100 silver before the 1st of February 2026.
And there you have it. That's our deconstruction of the silver supernova case. I mean, the source lays out a really compelling story, right? It's all based on historical patterns, a serious supply and demand squeeze, and these huge macroeconomic risks. It definitely leaves us with a very clear, very bold set of predictions to watch. So the big question for all of us is, are we about to witness this so-called supernova, or will it just fizzle out? I guess we're all about to find out.